My name is Peter Yusuf, Senior Market Analyst at IronFX. In front of your screens, you have USDJPY's daily chart. We're going to be mixing technicals with fundamentals today, and definitely going to have a look at more specific trading instruments which have been affected or may be affected today and tomorrow. And should you have any trading instruments you would like to have a look at, once again, let us know in the comment section. Should we have time today, definitely we'll have a look at them. If not, we'll make time tomorrow. For the time being, once again, USDJPY in the spotlight. The bearish movement, the intense bearish movement of USDJPY was mostly due to JPY strengthening. It was characteristic that JPY strengthened across the board. We saw a strengthening of JPY against the US dollar, the pound, the euro as well. And fundamentals behind the bearish movement seem to be including the unwinding of a number of short positions on JPY through carry trade. That would be one. The second, which was interesting, or maybe interesting, it was going to be the BOJ's interest rate decision next week. The bank is expected to hike rates once again by 10 basis points. And more or less that would be another indication towards the bank's intentions about more rate hikes to come. For the time being, once again, on a technical level, we're highlighting the downward motion, which yesterday and during today's Asian session breached the 153.60 support line, now turned to resistance. Now, the downward motion could be described by the downward trend line, showing us also the limitations of the downward motion. And the next possible target for the bears would be the 151.80 support line, a level that was tested around here. While even lower, we note the 156. That would be the 146.40. There you go. Support base, a level which was tested here and also at here. So that seems to be also pretty valid. On the flip side, for a bullish outlook, it's remote. It's very, very remote. Theoretically, it could happen, but in practice, that would require the pair to rise, breach the 153.60, breach the upward trend line, signaling that the downward motion has been interrupted. But also, I would require the pair to breach the 157.70 resistance level. Let's have a look at Euro USD. Let's unlock the taskbar. Give me a sec. Sorry about that. Here you go. Now, let's get out of USDJPY and drill into Euro USD's daily chart. Let's realign the labels. Now, Euro USD dropped yesterday. Actually, it was a continuance since Tuesday's drop. But I would be adding here that the release of the preliminary PMIs for July, as we had seen them in yesterday's presentation, seemed to be darkening the outlook of Eurozone on a macroeconomic level. It was characteristic that the manufacturing PMI figures, both for France and Germany, especially Germany, were maybe worse than expected. And in my opinion, that tended to intensify worries about the sector as a whole. It should be also noted that the wider contraction of economic activity dragged practically economic activity in the Eurozone as a whole in a hold. It's characteristic how Eurozone's composite PMI figure came out at 50.1, signaling stagnation of economic activity. And that definitely is not good on a GDP level and economic outlook in general. For the time being, we tend to maintain a bearish outlook for the pair, given the downward motion of the past week, which is being characterized by the downward trend line. At the same time, though, we have to note here that there seems to be a relative stabilization of the pair. And it's characteristic that today the pair is in the greens, up until now at least, while the RSI indicator remains flat at the reading of 50, implying a rather indecisive market. Should the sideways motion be maintained, I would expect it to be confined within the boundaries set between the R1 1.0860 and the S1 1.0815. We are going to be expecting for the time being the bearish movement to be maintained, and should that be the case, we may see the price action breaching the S1 1.0815 and start aiming for the S2 1.0765. On the flip side, should the pair stabilize, as mentioned before, definitely we would require breaking of the downward trend line, which would be signaling interruption of the downward movement. For a bullish outlook, however remote that may be looking at, would require the pair to breach the downward trend line, but I would also require the pair to breach the R1 1.0860 and start aiming for the R2 1.0915, a level which was tested heavily here. So overall, for the time being, the bearish outlook for Euro USD seems to be maintained. And at this point, there's a question from Mr. Ricardo Silalahi whether we're analyzing Forex or gold. We are analyzing actually Forex, gold, stock markets. We are not shy of analyzing also commodities like WTI. Everything is fair game, in our opinion. And actually today we will be having, or we are scheduled to have a look at USD/JPY, Euro USD, USD CAD, AUD USD. I will be having, regarding stocks, a closer look at S&P 500, maybe even Nasdaq, and gold and WTI are also in the schedule. So let's have a look at USD CAD. We're going to be working from scratch from here on. Definitely, I'm going to be setting a resistance line on this peak here, right here. Would be the 1.3845. Once again, we are in USD CAD in red. I'm going to be keeping a very, very close quarter resistance support lines. Let's move to the support lines. This used to be a resistance line, has been breached. Now has to be turned into green, given that it's a supportive role. Definitely we have one here. You can see one touch, second touch. That would be the 1.30. 35.90. And I'm keeping another one here. To 1.36. It's a little bit too close, so I'm going to be raising it up to here. We have a mid level which was tested to the downside here, 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 and even here. That would be the 1.3655. On the flip side, to the upside, we're going to be cutting the chart loose, and actually we may be in for a slight surprise here, in the sense that we have another level right here, 1.3975 in red. On a fundamental level, I would be noting, allow me to speak fundamentals as we're working through the technicals. On a fundamental level, I would be noting BOC's interest rate decision yesterday. The bank proceeded to cut rates as was expected, and attention turned towards the accompanying statement of the bank. And at this point, I would be noting that we may be in for a surprise from BOC. And I'm mentioning this because we had, on the one hand, the bank recognized that inflationary pressures are easing, and practically they're driven lower by excess supply in the Canadian economy, which is a valid comment. That tended to be somewhat dovish, and in my opinion tended to highlight the possibility of further rate cuts down the line. On the other hand, though, the bank also mentioned that it will remain driven by fundamentals, and at this point I'm going to be changing this all the way down here, cutting the slack. There we go. Now, the fundamental drive behind Canada would be on the bearish side for the time being. And it's characteristic that we have an upward trend line for USD CAD right here. That tends to drive the pair higher. On the flip side, note how the price action remained within the boundaries of the R1 and the S1. And let me also correct the contents of the labels so we have a clearer picture. Starting with the R3, which is set at 1.4135. The R2 at 1.3975. And the R1 at 1.3845. In the support line, we have the 1.3590. The S2 at 1.38, sorry. Yeah, 34.75. Let's correct that. And finally, the S3 being set at 1.3340. Now, the bullish movement is expected to continue, and we're basing this practically on the upward trend line and the RSI indicator, which has reached and slightly surpassed the reading of 70, implying that the pair is, or at least has, a very strong bullish sentiment among market participants. One slight catch, and the catch is that the RSI indicator has breached the reading of 70 even slightly, which may be implying that the pair has reached or is nearing overbought levels and may be ripe for a correction lower. Same signals come from the fact that the price action, you can see it right here, is flirting, actually is higher than the upper Bollinger Band, which may slow down the bulls and cause a correction lower as well. For a bullish outlook to be maintained, we would require a clear break of the R11.3845 and the pair to start aiming for the 1.3975. On the other hand, we may see the pair hitting a ceiling at the R1 like it did right here and correct lower. As long as the correction lower remains above the upward trend line, the upward movement bias is being maintained. Let's have a look at AUD/USD, which has been dropping heavily. And here you go, you can see how today's drop, and we're not even half day through, is more intense than any other drop over the past 1, 2, 3, 4, 5, 6, 7, 8 days. Let's draw some levels. Definitely one will be here. In red. Second would be placed here. And one could place another one, which used to be a former support line, now turned to resistance given that it has been broken. Support lines, one in green, please. Second support line, definitely this true here. Let's unlock the chart and go back. Third support line here. I'm going to be skipping this true as we have confirmed secondary multiple hits on the level at this point here. So let's also add some labels. Now on the fundamental side, Aussie traders are quite worried given the close economic ties between Australia and China. The news coming from China are quite worrying and are not new. They have started over the past week or so. And may I remind you guys that on Monday, Monday the week before, that was 10 days ago, we had the release of China's GDP rate, industrial output, urban investment, and retail sales. There was a surprisingly slowing of the Chinese economy, which was very worrying. On Monday this week, the worries intensified as PBOC proceeded with a rate cut of 10 basis points on the 1-year and the 5-year interest rates. I would be noting that today we had another rate cut, this time of 20 basis points by PBOC, and that was related practically to short-term lending. It's obvious that the Central Bank of China is trying to increase liquidity in the markets, in the economy to be more exact, in order to boost economic activity. And that's something which, in my opinion, tends to intensify my worries. On the other hand, though, one could argue that the supportive measures for the Chinese economy could actually provide a footing for the Chinese economy to recover. That remains to be seen. For the time being, worries about China tend to be high and tend to weigh on AUD/USD, given that the Australian currency is losing ground. Also adding here now the S2 at 0.6360. And last but not least, 0. Sorry, give me a sec. Adding a new one, 0.6380, 6281. Let's have a look at it again. Could be a bit higher. 0.6285. That could also weigh practically on the Chinese yuan. I mean the fundamentals we have just mentioned. So, clearly a downward motion. The bearish outlook is intense, and we tend to maintain it. Again, one word of caution here. Note how the downward motion intensifies as the shift, or if you prefer the slope, of the downward movement intensifies as well. On the other hand, though, I would be noting that the price action has breached the lower Bollinger Band, and similarly, the RSI indicator has breached below the reading of 30, both highlighting the strong bearish sentiment for the pair of the market, but yet at the same time implying that the possibility of a correction for the pair higher is pretty high as well. So do not be surprised in that. Let's have a look at S&P 500. Now, S&P 500, I would like to zoom out of this. This is the daily chart. I'm going to the weekly one. And there has been a longer upward trend line which has been guiding the index. If we drill to the daily chart, this becomes more obvious. And one could add a new upward trend line as it has intensified its upward movement and has been breached. One could even argue with another one right here. So overall, the bullish movement has been interrupted, in my opinion. In a more long-term view, the bullish movement may still be holding. But in this case, we're talking about the daily chart. You can see how the pair interrupts upward movement once, twice, and it's aiming for the third. Definitely, we will be setting a resistance line at the peak. In red. And that would be the 5720. If we drill into the weekly chart, we can see, and the monthly chart, we can see there is no higher point. That's a record high level for the index. I'm going to be a little bit conservative here and allow me to set another resistance line right here. Which would be the 5585. Actually could go 90. Yep. And the third one, it's just above the price action. Right here. This was a platform which was used and not broken for further higher movement of the index. It's going to be set at 5,490. On the support side, I'm going to be setting a former resistance line as a support level. Right here you can see the peak. And I have to warn you guys that most probably the distance between the support lines is going to be wider than the one of the resistance lines. Having a second one right here could go a bit lower. Nice double touch. On the one hand, on the other hand though, it was clearly broken here, and one could add one here. 5,235. And adding another support level would be practically a former resistance line right here, a bit higher. 5,120. With the next one being set a bit lower on this show here. You can see this level has multiple touches. I think that's pretty valid, and we're talking about the 4,960. I know it's pretty wide, but to tell you the truth, I don't care about whether it's symmetric or not. My main worry is to hit chosen peaks. Now starting with the R3 being set at 57.20, the R2 at 5,590. Locking it in. It's always important that you have a very clear picture once you open the chart. And for that point, I'm always insisting that you do a very thorough and detailed charting analysis and work a little bit with oscillators as well, provide you some more mechanical analysis in the technical side. 53.7, 170. Let me correct that. There you go. You have to clearly state what the direction is by marking trend lines and channels. And at the same time, set target levels with support and resistance lines to be stated very, very clearly. Moving now to the S3 at 5,120. Okay, let's log in and let's talk a little bit about the fundamentals. The main worries about the US stock market practically stemmed initially from the worries caused by the, I would say, lackluster earnings reports of tech companies. However, that was only the beginning. And it seems that the market will now expand beyond the tech sector to other shares as well. I would be noting here that on technical level, the picture is worrying. Now, up until now, we're talking about a correction, which is not a problem. But should US stock markets not find a footing within the next couple of days and possibly breach also, in the case of S&P 500, this very, very long-term upward trend line. You can see how it had started in October 23. Now, should even that be broken back to the daily chart, then we may see the bearish movement becoming a self-fulfilling prophecy, and the picture could get pretty ugly. On the other hand, I have to note here that the bearish sentiment is being supported also by an RSI indicator, which is dropping. It has dropped below the reading of 50. It's currently aiming for the reading of 30, more or less implying that the bearish sentiment among market participants for the index is, I wouldn't say accelerating, but definitely it's intensifying. And should that be the case, we may see further bearish movement. On the other hand, though, note how the price action of US 500, that would be S&P 500, is actually now breaking the low boundary of the Bollinger Band, which may slow down the bears, maybe even cause a correction higher. For the time being, we tend to maintain the bearish outlook. We set the next possible stop at the third upward trend line right here, while even lower we have the 53.70 support line. For a bullish outlook, we need to see a total reversal of the picture. So practically the index has to breach the 5490 resistance line, breach also the 5590. That would mean practically that the pair has to recover all of yesterday's lost ground and move even higher towards the 57 and 20. It's quite improbable, but for the time being, I think that would be the only thing that could provide some hope on a technical level for the bulls. On the flip side, we may see the index stabilizing. In that case, we may see it stabilizing just below the R1 or even revolve around that level. Let's have a look at WTI or even gold, and we'll have a look at WTI later. Now, gold's price has a peak right here. That's definitely a resistance line. 2,485 could go lower. Let's go to 2,480. Too low. The peak is set at 2,483 and should be in red. There are a number of resistance lines here which could come into play. The one is definitely on this peak. And I will be setting the third one right here on this true. That was a support line which has been breached, and it was very, very characteristic how it was breached on Tuesday. There was an intense bearish movement of gold. If we move now to the support lines, then I would be definitely setting one here. And you can see it, I'm setting it on the lowest row. 1, 2, 3, 4 touches. It's very, very interesting. In green, that would be the 2350. It's a nice round figure. We're going to be narrowing the path a bit. One could set a median support line here, and definitely another one here. Should we go and be a little bit large? Let's unlock the chart and go a little bit back. Okay. That means we have to go all the way back to April. I'm not going that far, but that would mean another level here. Let's readjust the chart. Let's set the resistance lines and support lines, the labels, 2,483. The R2 at 2,432. and the R1, that would be a prior support line which has just been broken, would be set at 2,384. Now the margins are very wide. Usually we have margins, or if you prefer distances, between resistance support lines. Sorry, that should be in red. Which are at around $20-$25. But there was a very intense upward movement since the beginning of the month for gold, and it was followed by a very intense downward movement by gold. So that forces us to keep the distance between the resistance lines at very, very wide levels. Now, starting with the support lines, the first support line is set at 2,350, which tends to be a little bit more normal. And the thing normalizes even further as the S2 is being set at 2,320. And the last support line set here, it would be the 2,293. Now, we tend to maintain a bearish outlook for gold's price, and we're highlighting, okay, one could argue that there is a downward trend line guiding it, the precious metals price, somewhere here. I'm ignoring this false break here. But we can also see that the downward motion has intensified. So one could argue that there is still downward motion like this. On the flip side, there are two signs which tends to imply that the price action needs some stabilization, and definitely the narrower red candlesticks tend to imply a slowdown of the bears, and that happened since the price action had broken below the lower Bollinger Band. So we may see some signs of stabilization. I wouldn't be surprised to even see a correction higher, breaching above the R1 2,384. But as long as the initial downward trend line remains intact, we maintain our bearish outlook and treat any correction as just that, a correction lower, nothing more, not a change of trend. For a change of trend, I would require the precious metal to breach the downward trend line and possibly be confined between the R1 and the R2. A possible stabilization could also occur just below the R1. However, it would become a little bit more slowly obvious. Should the bears maintain control or intensify their grip over the precious metals price, I wouldn't be surprised to see the price of gold actually aiming, if not breaching, the S1 2350. Okay, let's have a look now at WTI. Now, WTI's price, we have definitely a resistance line right here, in red. A second here. A third, I would be placing it here. It was a former support level. However, it was tested also to the upside a number of times. And it seems as if the case is for gold's price to reach a support line oil's price to reach a support line at 75.50. Setting another support line, we have to turn this into green in order to be easily visibly recognizable. Second support line being set on this true here. 72.40. And last support line being set at this show, which is also the low point of our chart at 67.90. So we have our target set. What is the direction? Is the next big question. One would be note this downward motion here. And also note the intensification of the downward motion. Right up to here. Practically at today's opening. Resetting the labels. 87.05. The R2 being set at 83.95. The R1 at 79.25. The S1 at 75.50. The S2 at 72.40. And the last support line at 67.90. Sorry about that. Now on the fundamental side, we have to note that the price action of WTI continued to drop, maybe with a small recess yesterday, despite the US oil market proving to be quite tight. It was characteristic that both AP and EIA showed a drawdown of oil inventories over the past week. And that would mean that practically demand levels in the US oil market were not able to be surpassed by production levels. They were higher. So practically demand outtrumps supply, which creates conditions for a tight US oil market. But oil traders ignored that. The effect was minimal. And it seems that the market worries about the international demand side of oil are driving oil prices lower. And I would be highlighting here China. Why? Because if you can see, the drop of oil prices has started last week. And we have, say, for example, on Monday, this would be Friday, and this would be last Thursday. And one could even argue they go even further back. So for the time being, we tend to maintain the bearish outlook for the commodities price, and we're basing this on the downward trend line, 1, 2, on the RSI indicator, which is it's falling, and it's nearing the reading of 30, implying a strong bearish sentiment among market participants for the commodity. Should the bears maintain control, I would expect them to breach the S175.50 and start aiming for the 72.40, a level which was able to reverse a deep contraction of oil prices and push them back up. For a bullish outlook, it's a very difficult task for the bulls to reverse the direction. the price action of WTI would have to breach the pre-mentioned downward trend line, breach the second downward trend line, breach the 179.20, and start aiming for the 83.95. That's something which will take days to happen. And initially, should the downward trend line be breached, then we would be pausing somewhat the bearish outlook in favor of a sideways movement bias initially, and have a look where the direction is heading to in order to have a new direction. That should sum it up for the day. From all of us here at IronFX, best wishes for solid trading.
So as per usual, before we get started, just a risk warning. So our products are traded on margin and carry a high level of risk, and it is possible to lose all your capital. These products may not be suitable for everyone, and you should ensure that you understand the risk involved. A disclaimer: the information in this webinar should not be construed as investment advice or an investment recommendation, but instead educational material only. This material is just the personal opinion of the author, and the client's investment objectives and risk tolerance have not been considered. IronFX is not responsible for any loss arising from any information contained herein. Redistribution of material is strictly prohibited. So I'm Melanie. I'm an investment analyst from Everest Fortune Group, who were finalists for Best FX and Equity Research in the years 2019 to 2021. And today we're going to be talking about IC trading. IC trading, yeah. So this is a trading strategy that is pretty unique. So here's our agenda for today. We'll talk about what exactly it is and then get into some of the key concepts, followed by understanding what exactly it is and how you can make use of it. And then we'll look at what smart money looks like in price action. So if you guys have any questions throughout the webinar, feel free to pop a question into the chat and I will be happy to answer them. Okay, let's go ahead and get started. So what is ICT? So basically ICT stands for inner circle trading. Okay, let me just allow you to pop your questions into the chat. Okay, so let's start by defining what exactly we mean by inner circle trading. So ICT, or inner circle trading, is a trading methodology that focuses on understanding the inner workings of the financial markets. So it involves analyzing market dynamics, identifying supply and demand zones, and utilizing price action analysis to make informed trading decisions. So it has now grown to become one of the most popular trading strategies around, focusing instead solely on price action. And it was originally created by Michael Huddleston to trade the forex market, but currently traders are using the same strategies to make profit in all and any market that they trade. So, yeah. So why exactly is it important for us to understand what ICT is? So in today's highly volatile and competitive financial markets, Having a deep understanding of how the markets operate can give you a significant edge as traders. So by mastering the ICT techniques, you can enhance your ability to identify high probability trading opportunities and effectively manage your risk. So what exactly it is basically employing chart technical analysis and operates under the premise that by studying price movements, support and resistance levels, and order blocks, one can to some extent pinpoint the areas with the highest liquidity concentration and consequently forecast emerging trends. Okay, so let's get into some of the key concepts. Okay, so firstly, for our key concepts, we'll go through liquidity, followed by displacement, market structure shift, inducement, fair value gap, optimal trade entry, and lastly, balance price range or order block. So these are the fundamentals that you need to know in order to take advantage of trading in this style. So first key concept we'll go through is liquidity. So there are basically two types of liquidity. There's the buy side and sell side. Um so firstly, buy side liquidity